This is CJ, Property Manager. I'm back as promised. So let's pick up where we left off with the last video, which was investments take a team. This video, we're going to drill down and unpack what a landlord does as part of that investment team. And just as a review, here we have the triple constraints where there's at least 3 positions that are filled in order for an investment to really pay for itself. And that's the tenants, the landlord, and the property manager. And now again, the landlord can play the position of both landlord and property manager, where he may have his hands really full and may find difficulty in maybe expanding and growing his portfolio of rental properties. But let's look at just some of the basics of what an investor property landlord goes through when they are creating and building their portfolio. And all landlords do this in one way or another. Is they invest in one of the 4 asset classes. And since I do property management and I work with investors of real estate, that's the main asset class that we'll be focusing on here. But really the 4 asset classes that a landlord can invest in, and really wealthy individuals do invest in all 4 of these asset classes. But let's just look at them as the basis for going forward and unpacking this video as far as what a landlord does. Is the first asset class is a business. This is a business where you provide a product or a service to the general public, the government, or anyone else outside of the company. This is where you have W-2 workers and employees. The next is paper assets. That's Wall Street. That's stocks, bonds, ETFs, electronic traded funds, puts, calls, all of those types of things. Those are all paper, not hard, but paper assets. The next is commodities. That's gold, silver, copper, wheat, corn, pork bellies, all of those types of commodities, where on Wall Street you can buy futures in these commodities, hoping it goes up or down. So that is an asset class, commodities. And then the one that we are focusing on for what a landlord does is hard assets. That's real estate. That's something that you just can't pick up and move if you want to put it in a more convenient place where you want to move to, a hard asset. Now, each one of these hard assets has a type of income that it generates, and that the IRS and our CPAs and accountants fill with the tax returns and other financials. Now, this is not financial advice in any way, shape, or form. This is all public knowledge. This information is from publications from the IRS and other financial firms. So this is not financial advice, but this is just basic understandings of the income types. Now, this first income type, this is earned income. This is what W-2 workers earn. Say they're employed in a business, that's earned income. That's where workers, they're trading time for dollars, or they're trading their skill set for a paycheck. But it's that kind of trade-off, which is earned income. Now the IRS and CPAs and accountants, they will say that earned income is taxed at around 40%. That's how much the IRS takes in taxes. Next, the other type of income is portfolio income. Now, a real estate asset class is not portfolio income per se, unless a landlord investor is fixing and flipping. Another word for portfolio income is capital gains. Portfolio income on Wall Street or in real estate, if you're fixing and flipping, that's where you take a product or an asset of some type, and we add value to it with our labor, with our creativity, with our skills to increase the value of it on the marketplace. And the marketplace will perceive that, they'll see that as more valuable, and it will be sold at a higher price point than it was acquired at. The same goes for paper assets. A stock, bond, ETF it will be perceived by the general public, this is supply and demand, that it is more valuable, so it's sold at a higher price and you have that spread, and that's where your profit is. So whether you're fix and flipping, you're taking a house that you fix up and that you flip, you have added value. It sells on the market for a higher price than what you purchase it at, and all the fix-up costs that you put in. And that spread there is taxed. Now that portfolio income is taxed at about 20%-ish, 20% according to the publications of the IRS. Again, this is not a financial recommendations in any way, shape, or form. This is all open and published on the open market. So that's portfolio income. And then the last one, and this is the beauty about real estate, and that's why landlords are what they are, and that's why property managers love to manage real estate, is passive income. Now, passive income, that asset is purchased at a certain price point. It may be fixed up, but it's not in terms of capital gains. With the passive is we're not putting any additional skills, labor, and a lot of additional builds into a property. We're just fixing it up and then we're simply renting it. And this type of income, where there's no labor and time involved by the landlord per se, is this passive income. It is taxed per the IRS. This is not financial advice at all. By the IRS publications, CPAs and accountants, this is taxed at anywhere from very, very little to 0%, depending on the depreciation and the cost and expenses of maintaining that property. So this passive income, you keep by and large most of the income, the cash flow, that comes out of this type of hard real estate asset. So that's just a basis I wanted to give you. A lot of you already know this. This is old information to you, but others just wanted to share that just in case. It's always good to spread around the information. Now let's jump over to what a landlord actually contributes to this triple constraint investment team. A landlord is very, very important. They set the tone of what a property manager manages by. That landlord does. So what a landlord contributes is, number one, is they provide the product, the rental, whether it's a single family house or some kind of multi-family. They provide the product. They take the initiative, they take the risks, and they bring that product onto the market for tenants to move into and make a home for themselves. And then, of course, the landlord benefits by that monthly rent. Number two, very importantly, landlords are the ones who establish and maintain the civility of the apartment complex, and by extension, the actual community. So a landlord has far more influence on their community than they may realize. That landlord maintains the civility of the neighborhood, which makes it very attractive to tenants to want to come in and move into. And then probably most of all, I want to drill down on this, is number three, a landlord protects property rights. Now, what do I mean by that? Well, in our Western society, we've sort of been reduced down to thinking that property rights are only hard assets, such as the roof, the walls, the windows, the fence around the property, the beautiful grass, the thick green grass that gives the property a wonderful curb appeal that tenants love to play on or drive up to at the end of each day. That is a hard property right, but there are intangible, soft property rights that a landlord protects, such as the safety of the neighborhood and the apartment complex. That is a property right, and it's the landlord's, again, initiative and investment that makes that area safe for the tenants and those around it. Another property right is the cleanliness of the property and the surrounding neighborhood. That's a property right, and it just doesn't happen magically. It does take an investment. It does take ongoing care and maintenance to ensure that an area is clean, which makes it very attractive to tenants or new families who are moving into an area. This is the place they want to rent. This is the place they want to stay because of the property rights that the landlord provides. And then finally, influences. There's property rights. There may be possibly unsavory elements that may want to move into an area, thereby violating the property rights of a community, of an apartment complex area. Well, the landlord is the one who enforces and sticks to the safe, civil, and keeps out the unsavory influences that may want to move into an area, which can all pull down, destroy these intangible property rights and make an area, apartment complex, less desirable to tenants, and thereby reducing the rents that can be charged. So the property rights, intangible and tangible, are very important, and it is a property manager who sets the tone of that. Now, as a landlord who sets the tone of that. Now, a property manager fulfills and backs up and implements those contributions of a landlord. Wrap it up here. So this is what a landlord does. They hold a very, very important position as far as the triple constraints in an investment team. And this is what they bring and contribute to that investment team. It's very important. They do set the tone. So there it is for you. Feel free to look at this video and feel free to give me a call. My name is CJ Wells, property manager here in the South Metro area. Do give me a call. I'd love to chat about property management and real estate. It's my first love. My number, 720-283-3110. And I'll see you next time. Thanks. Bye.